The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
For years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Expect to have hope rekindled. Expect your prayers to be answered in wondrous ways. Market-wise, let's take a look at it out here. We have the Dow Industrials down 17, NASDAQ off 33, S&P's down 4, gold contract down $3.60, traded at $1,128 an ounce. Silver up 7 cents at $14.61 an ounce. Platinum down $2 at $9.15 an ounce. Copper flat at $2.26 a pound. Light sweet crude up 82 cents at $45.25 a barrel. Bonds 10-year up 11 ticks, 128.24, 30 up 8, 157.25. King dollar down 187 ticks, trading at 95.99. The euro up 14 at 112, and the yen trading at 119.65. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Oh, man, this is going to be a trip. Okay, so this is what you have. If we start with the SPYs, what you have is this. SPYs are trading at 187.61. The low of yesterday was 187.64. Bottom line is that we got 111 million shares versus 178. Now, you're going against the lows that were established out here on the 24th, 25th, and 26th. The 26th is 188.37. You have volume of 339 million. The 25th, we have 369 million, and the 24th is the monster with 507. What we had done is that we come down here yesterday. You get into the lows, dramatically lighter volume. Today we're going to see lighter volume. Real key out here today is that can it close above 187.64? Because if you don't, then you're going to go after the lowest swing point. The lowest swing point in this particular case would be the low that was established out here on the 25th, which is 186.92. Now, let's go over, we're going to look at the futures next. Why the futures? Because what we had going out here this morning is you had a decent bounce going out here, and I expect that you're actually going to see this try to get in the green as we come into the close. Now, this is going to be really tough, and I'll show you why. But I suspect when it's deviant, that's when, you know, it gets even better getting into the green. So the futures have just got under the 1867.25. That was the low that was established out here this morning at 0950. We're at 1867. What I expect you're going to see here now is that it's going to try to make a run to this 1879. I don't think we have enough time to get up to the high that was established this morning of 1889. That being said, if it just does that, then you'll get a bounce going. Now, check this out, because this is intense. If you go over to the 3 Qs, the NASDAQ has been the weakest, bottom line. And what you have out here in the NASDAQ, it still continues to be weak. And what you have is that you have Apple falling apart. And what's going on is that literally about a half hour ago, what happened is Google just unveiled not only a phone that's going to go after Apple, but they unveiled a tablet that also is going after their business aspect of it, and this tablet's going to be all of $600. So bottom line is that what you have inside the Index 100 right now, Apple is down 365. You get 53 million shares trading. That baby continues lower, and I expect you're going to see it continue lower because if we take a look at Apple for a second, wait to see this shake out. There she is. So Apple's down 360 at 108.85, and what you have is that what it's going after is the swing of 107.36. So that in itself is going to be a tough one on the NDX 100. Let me go put this back up again. 1 second. There we go. Okay, so now let's go over to the NQs. So we take a look at the NQs. What you're going to see with the NQs is this. NQs, which is the NASDAQ futures, they're down 31 right now. The NQs got into the lows of this morning. The low of this morning. Okay, this has a shot. This is going to be interesting. Okay, so the low of this morning is 4,072. Right now, you're 8 points below it. We took that down with 9,400 contracts versus 13,900. So we'll see whether it can bust and get back inside that range. The IBB will be the one that will have to save the NASDAQ. The IBB at one point today, folks, was trading 303. Got to 303.31. You are pulling back into the strength from this morning, which is 296, 287 rather, 287.18. That's how it took off from this morning, doing lighter volume. We'll see in the next hour if the IBB can get anything behind it to get into higher price. Gold contract. What do we have with the gold contract? Gold contract pulling lower, lighter volume. It has rejected the lower. It's not actually a swing point, but there she is right there. We got to 1123, and what you have is that the lowest swing out here is 1120. We've come into this area with 97,000 contracts versus 144,000. What does that set up? That sets up that gold wants to run to 1156, wants to run to 1169. I expect you're going to see it run up into 1234. If you do take a look at the two royalty stocks, both of them are pretty good out here. You got Royal Gold, that is up 33 cents, 600,000 shares, not bad. Not holding price that great, but has the push with volume. When you have the push with volume, you go right back topside. Franco-Nevada, same deal. We've done 757,000 shares. That also is pushing with volume. Bond market. What do we have with bonds? Bonds right now, folks, look like, if we take a look at the 10-year first, what you have with the 10-year, we have done 1.1 million contracts, and bottom line, that says it's going to go hit the high, man. This is intense. Yeah, that says it's going to hit the high. It's cleared the 128.15 area. It says it's going to hit the high. You have a little divergence here because inside the TLT is not getting traction. TLT, we're at 123.87, and what that sets up, you close that closed 10 cents lower. You're going to have a failure on price and on volume. Dow Industrials right now are down 13. Nasdaq's off 35. S&Ps are down 4. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 8. Nasdaq's off 37. S&Ps are off 4.5. And as we do each and every Tuesday at 20 past the first hour, we have our man, Mr. Basil Chapman. Don't forget, folks, Basil is a great program right here at TFNN, 11 to 12 every trading day. Get it right on your cell phone, TFNN.MOBI. If you'd like to get Tiger TV, just go to TFNN.com. On your cell, you'll see the box on the right-hand side. Hit that box. Our servers will understand what type of device, phone, tablet you are on. You'll get Tiger TV delivered to whatever device you're on. Basil also got a great newsletter. It's the opening call. You can test drive it right here, right now, by coming over to our website at TFNN. Go to newsletters. Go to trading newsletters. See the opening call right there. You can test drive it 30 days, absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
Very good. Thank you.
So, talk to me.
All right. So we've got the Dow as always. I usually show this chart right here. This is the actual notation that I gave for yesterday, for this morning.
Yeah.
And what I discussed is that 16,000, for me, 16,000 represents the same as, you remember I spoke to you for months about the 17,500 level on in the Dow. And I said, as soon as we start to trade a couple of days below that 17,500, then you've got vulnerability. And we went straight down to 17,034, broke that. That was like it's really like a complex head and shoulders pattern. Now what we're looking at is on a shorter term basis from the August the 24th low of 15,370. We had the pattern that I call the lowercase h. It looks like a lowercase h, which then makes another arch forming the lowercase m, and then there can be a larger arch formation, and that's where you test important support. So right now the Dow is at 15,978. That 16,000 level it isn't just a psychological level, although it partially is. It's like buying gas for $3 something instead of $2.99. And in this particular instance, it says that you're beginning to go to the 15,000s, and that's going to be very important. So this is a key session. The MACD has just turned down. We've still got, about 35 minutes to go. The stochastic's at the low of 19%. That is partly the issue. So there's a larger, you can see this larger arch formation coming back to test key support and closing basis. The The last low was, today we've taken out the recent low of 15,979. So let's just leave that because we want to now go to the weekly chart. And the weekly chart says that that skinny candle from August the 24th, where the Dow dropped 500 points at the opening, then added another 500 points, that 15,370 with that green close, that candle close, that looked very positive, except you always talk about a foundation. And if I look at this, there's really no foundation here. The foundation is at 15,855, the October low of last year. So this is very important because it takes me, it's so interesting because I'm now looking at daily charts, which are taking me immediately to weekly charts. We've got just one session to go for the end of the month, September. And let me show you something. There's a candle. I've spoken to you about this before. It's something I discovered a long time ago, and I called it the Roman candle, Chapman Wave Roman candle. That's the candle of August. Essentially, it opens. It's interesting that it was the very beginning of the month. So what happens is it opens, makes a fractional new high. That's the little wick, and then it plunges down, but it closes. The candle itself closes halfway or a little bit more than halfway off the low. Then what happens is I have a technique that I discussed that includes the wick. And what I'd said is if there are 2 out of 3 days of continuous closes below 16,000, you start to skip daily and weekly and you go straight to the monthly, because the monthly will say, and now I'm going to keep your eye on this, I'm going to change it to the IWM, and you'll see exactly what I'm talking about. IWM had that Roman candle.
Yeah, that's a mess.
And the moment you start to break halfway into the wick and hold there just for a little bit, then all of a sudden the low that was made of that candle becomes a target. So we do have to be very careful here. And what I've also been looking at, and with subscribers, what we've been doing is we've been shorting different sectors. And as you know, for a very long time, we've been short. We've had a short position in the IBB. The high was 400, and we got short at 393, and we're still short. Now, what's important is that I then included the XLV, which is the healthcare. So now you've got one of the best. I mean, if I look at this monthly chart, who would have guessed that the candle that would take out the 9-period moving average would just plunge from the 77.40 high down to 56.63. So this is another candle, and it's starting to go halfway into that wick. And now I've started to include other short positions because this isn't one that we were short. We were short a different stock in this sector, but we only got in today. And so I don't really want to give it away. But the CI, which is Cigna in the healthcare insurance, is starting to give the sign that there's that arch formation that I always talk about, peak D. Look at the weekly has gone to a peak F. So slowly, one by one, you're getting a pullback that is accelerating down from major highs. Look, this is AZO, made a peak F top 2 days ago. This is one of the best of the auto parts. So yes, we could get a bounce, but I'm not sure we could get a serious bounce that has energy to the upside, because if you're starting to get, and you do a lot of work with this, but I bet if you start to look at the healthcare, if you start to look at the insurance, and even the auto, you'll start to see the big mutual funds start to exit. They're exiting some of these key stocks in these sectors. And if that's the case, then I think rallies are going to be fairly short-lived. So I'm very cautious. And here's another one. I've spoken to you about this many times over the years. Cintas is a clothing, overall and clothing rentals. And I've looked at this, for years. And it's just giving me signals now. We missed by 25 cents going short yesterday, just off the top. We wanted to go short at 88.60. It hit 88.35. But look at the way this is pulling back sharply. And this is really the economy: overalls, clothing, rentals, that sort of thing. So I'm watching it really closely, because if Cintas, CTAS, if it starts to break support in the 83 to 82 level, I think it can go down quite a bit more. And
folks, you can come over to our website at TFNN. You're going to see right under newsletters, you can see the opening call. You can test drive it 30 days, absolutely free. Don't forget, Basil's on every trading day, 11 to 12 Eastern Standard Time. And, you know, the small caps there, Basil, it's intriguing. So what you have here right now, folks, is that the IWM is breaking out its low. The low that we're talking about is that 108.26. Now, the reason that that is so dangerous, not that part of it is not as dangerous. What is dangerous is that last night, the Nikkei 225 blew away its low. It was down 4%.
Yeah, I'm showing the chart. Look at peak F in the weekly chart of the Nikkei. This is the futures. There's that Roman candle, one there, right there. And look, we've taken it out. This candle is just, it's really exactly what it does in real life. When you light it, whoosh, it blows up. So you've got to be really careful with this. And you were talking about the IWM. So the IWM also has biotechs. And I think that, look at this, the weekly chart has come all the way back. So yeah, we've got to be very careful. Yeah, that's the most important thing.
You have a great one, safe one, Basil. We look forward to the show tomorrow.
Thank you very much, Tom. Have a great day.
You stay right there, folks. We'll come right back. Dow right now is down 43. NASDAQ is off 51. S&Ps are down 8.5. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is down 45. You get the NASDAQ off 53. S&Ps are down 8.5. And it's going to be dicey coming into this close, folks. So what you have is this, okay? So picture how dicey this is. You have the small caps that have taken out the August 24th low. And if that's all it was, that wouldn't be that bad. But what it is that you had the Nikkei 225 blow away this thing last night. It was down 4.5%, folks, okay? So right now the small caps are 107.30. The low that we're talking about is let me pull this down a little, is 108.26. Okay, so it's not a huge amount away from it just yet, okay? That level there, now let's go over to the NDX 100, because it's the NDX 100 that the biotechs, if we take a look at the 3 Qs, what you have is that you have 40 million shares traded. You're going against 75 million, and you're going against 104 million. Now, that correlation there is saying that there's not enough force. What you need, however, is you need a rejection of lower price right at this particular point. You don't get a rejection of lower price, you're going to run into this 98.08 level. We go take a look at the Dow Industrials. What you have with the Dow is this. The Dow Industrials are pushing into your swing point that was established out here on the 1st, as well as the 15th, as well as the 24th, 5th, and 6th. Now, that level there, this is what's happening, and this is that level there, the Dow is pushing in, we're going to do about, we're probably only going to do about 900 million. That's saying that when all this is set up, and this is about as devious as it can get, is that we still are going to bounce, which is really wild. Listen, I know, man, because I'm a bear. But the bottom line is that when you get into these lows like this, and you've done a 100% move of a move, and you continue to test like this. This is a level of continued testing that when you get that, you're actually getting more proof that this thing wants to bounce. Now, you put that together with Apple falling apart, because Apple is falling apart and is going to continue to fall apart. It's going to get really intriguing as to what can get the market to bounce. You know, the intraday out here, which is pretty cool, is that and Apple is having a huge amount. Apple's a huge weighting structure inside the NDX 100. The bottom line is that if we look at the NDX right now, what you have, I believe, it wasn't even showing up when I first was on the air. Now it's number 2 on the way down. You know, it's the weighting structure is huge. No two ways about that. The only thing that could save the NDX 100 is the IBB. Let's go to Mark in Fort Collins. Hey, Mark, what's going on?
Hey, Tom, how are you?
I'm doing great, man. You having a good day out there?
Yeah. Hey, I just wanted to point out one thing on the IWM, which is really interesting.
Yeah.
If you look at the highs of the lows of October,
yep.
I don't know if you've talked about this yet, because I missed part of your show, but it's actually just bounced off the highs of the lows of October, which had monster volume.
Yeah, that's pretty cool.
15th and 16th, the high was 106.99 and then 107, and we got down to 106.99.
Right, and now watch what also happens. And this is, I'm glad you called about this, because just as, you know, I was looking at you on the marquee, and I look and I says, you know what, hold it. This is what you have to watch out for, folks. So check this out. Let me just see this for a second. You have this expense ratio, okay, is 20 basis points, yeah. So watch this. What happens with the ETF structure also is that it's always going to be lower because of the fact that the expense ratio comes out of it. Oh, this is interesting, man. Yeah, so that also has to do with, and what happens with the expense ratio is this, folks, is that every quarter the expenses are going to come out of it. So on a continual basis, 5 quarters will equal 1 point, period. Okay, so that also has to do with it, you know, and as you just pointed out, man, that's the big one, you know. So we'll see where it shakes out. The market itself, I would watch the, you know, the NDX 100 is the number. That's been a leader on the way up and a leader on the way down. You know, I suspect we're going to go a lot lower with that, but even coming into this, I know this is dicey, but it looks to me like we're close to a bounce right now. You know, if we, and I can tell you, folks, yeah, that's where I'm hanging my hat right now. I'm a bear being close to a bounce. Tom the Bull for the next few days.
No bull, baby, no bull. All right.
Okay, man. Have a great one. Have a safe one. pretty sick, folks. I haven't been a bull in a long time, but this is what. Hey, listen, we'll see how this sets up. This is when it always gets dicey. There's no two ways about it. We take a look at the some of the Dow stocks out here. This is what you have. You have Honeywell up 52. We got Big Blue down 16. Walmart's down 12. Exxon's up 20. You got Oxy up 53. Big Mac is up 116. And if we go take a look at some of the higher, what also is getting hit? I want to thank the Tigers and Tigresses in the den. Facebook's getting hit. Facebook 3 days goes from 96 down to 86. That's pretty intense. 85.72 to be exact. What that's also doing, though, which should stop it in its tracks, is the highs of the 24th. That's, excuse me, folks, 87.14. That level there is barreling in there with dramatically lighter volume. So we'll see if, in fact, it can save itself at that particular point. You get a slight bounce out here, and the biotechs. So watch the setup in the biotechs. Now, the setup in the biotechs, folks, the biotechs traded up $10 today. Now you're down $1.45. What you're actually doing, though, is that you're pushing on the lows of yesterday with lighter volume. And that's what it's going to take for a bounce. Yesterday you had 11.7 million. Now you're doing 7.3 million. You're pushing right on that. That's exactly what it takes to get a bounce going. And that bounce, if in fact we get it, folks, I expect you're going to see a decent bounce. And the contraction as you go higher, the contraction in the volume will get pretty dramatic. The contraction in the volume that we actually have today is dramatic in the context of how you're going against the 24th, the 25th, and 26th. And as I said a little bit earlier, the IBB, which has led this whole deal, did 100% move of a move. When you do 100% move with a move, most times that's the most you can do at that time. That's all it is, at that time. Now, let's go overseas, because if we go overseas, we want to be prepared for the future. Guess what? Go to the Nikkei 225. If you're a bull, you don't even want to look at this, folks, because Nikkei 225, strong market, has been a strong market for a long period of time. The Nikkei's off the high of 20,800. You're down 4,000 points. You just broke out the low of the 24th and 25th. That is setting up the Nikkei to get into the 16 to 50, to 13,000. Let me put this up on a monthly. That's setting up, there she is right there. That's setting up 15,900, which isn't that bad, actually. That's only 700 more. It was down 700 last night, but that's 8% in 2 days. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are up 6. NASDAQ is down 36. S&Ps are down 3. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow is down 20. NASDAQ is off. NASDAQ is down 45. S&Ps are down 6. And if we take a look at some of the higher volume stocks, this will be a low volume market as we're coming in, but the higher volume stocks, you have Facebook down $3, Apple's down $4.16. Both of those putting big pressure inside the NDX 100. Williams Company is down an additional $1.80. We have Freeport-McMoRan up 22 cents. You got Intel up 43. Inside the Dow, what we have is this. You have Boeing up 13. Well, here, let's go through the weakness and the strength. Inside the Dow Industrials right now, the weakness, Apple's the culprit. Apple is down 416 at 108. You get Nike down 298 at 119. Home Depot is off 188 at 112. And Goldman is down 193. 3M is the leader inside the Dow Industrials, and that's a dead cat bounce. That is up 272. You get Visa next, 105. Intel is up 44 cents, and Johnson & Johnson is up 123. Inside the NDX 100, well, the culprits inside the NDX 100 go like this. On the way down, Discovery Communications is number 1. That's down 149. You have Dollar Tree. Oh, there it is. It's at it again. Dollar Tree is down 257 at 66.13. Apple is coming up the rear, down 408 with 10 million shares at 108.34. Putting strength into it. Baidu is up 277. You got Cerner Corporation up 115. Micron Tech is up 25. And Fox is up 47. What's going to get intriguing out here, and I haven't got the full story on this yet, but check this out. Let me pull up Toll Brothers for a second. I want to show you something here, because this is going to be pretty intense, folks. I'm going to get the scoop. I'll have the scoop on this tomorrow. So, when you take a look at Toll Brothers, you know, Toll Brothers off its high, came down from a price point of $42.19, fast, furious down to $34 on the 26th. You're breaking those areas right now. You take a look at this, and we put this on a monthly basis. Well, on a monthly basis, it looks like, you know, you very well can get into $28. And right now we're at $33. Okay? Let me put this on a monthly basis here. But wait till what I'm going to tell you, you're going to blow your mind here. And I'll have all the information on this tomorrow. So, $28.75 is game. Okay, so fundamentally, the housing business, folks, is, you know, basically on fire. Okay, but check this out. This is pretty wild. What's wild about this is that there's been zero information about this. At least I haven't heard it. I heard it 3 weeks ago from my attorney, and you know, at the first get-go, I wasn't really paying a huge amount of attention to it. Then I says, hold it. This can't be right. That's the first thing I thought in my head. And I says, okay, I suspect it is right, and I'm going to find out tomorrow. But check this out, because we have another PNS that I'm doing this afternoon. And what's going on is this, is that the FHA and the VA loans are changing as of, so watch what happens. When you do a P&S right now with someone, FHA, VHA, 45 days you can close them. Some of them 30 days. Bottom line is never more than 45 days. Well, starting on this one here, I have to have this dude sign this thing by Friday, because what's happening as of Monday morning, they're claiming that a FHA, VA loan is going to take up to 2 months and maybe a little bit longer, 2.5 months to close. Now, if that is the fact, okay, which I'll know tomorrow, that is going to throw a spin into these home builders in a huge way. The reason being is that anyone that's in this business, you know, bottom line is that quarter by quarter you want to move out so many houses, okay? And that is going to be a huge problem, but guess what? You can take advantage of it. This is what's so cool. And I'm going to make sure that we have all the information. I need the information myself for our own fund, okay? But it's a big number. And what's going to be, you know, really a trip, if in fact it's going to take that long, well, guess what? All the numbers are going to be skewed inside the home building equities. And that's, what does that do? That sets up a chance on a technical and a fundamental basis to set up some really good trades. Because you know, if you're going from a closing aspect from, let's say, 35 to 45 days to 60 to 90 days, that's a whole different ballgame. Because what everyone will do is you'll miss a quarter, and everyone looks forward, understanding how many houses am I going to move out per quarter as you're getting those houses ready and you're putting them on the marketplace. Okay, so. That's going to be wild watching this whole thing shake out. Our phone number is 877-927-6648. Volume-wise, this is what we have out here right now. You get 721 million on the NYSE. We take a look at the NASDAQ. NASDAQ is running at 1.9. So the NASDAQ will continue to have some juice on the way down here. The gold contract. So let's go over to the gold market here. I know what we want to do here. There we go. We're going to go to the dollar index, because it's still amazing that the dollar index just can't get traction. What the dollar has tried to do. Well, first let's go to Mike in Toronto. Hey, Mike, what's going on?
Yeah, hi. Thanks for taking my call.
How you doing, man?
Okay, we'll look at a TSX-listed stock. It's called Veresen. It's formerly known as Fort Chicago Energy Partners. Ticker symbol VSN. It's got a really nice yield, and it's about 9.2% Canadian. I've noticed that all the NYSE-listed energy pipeline companies are taking a hit the last few days. Any idea why?
Yeah, because they're losing money hand over fist.
How? How do they lose money?
Well, here, let's pull it up and I'll show you. Okay, so this equity here, the high's 19, the low's $9. Okay, pull this baby back. Okay, so this company here is telling you that from quarter to quarter, this is like a disaster. It did 89 million in this quarter in 2014.
Yeah.
It did 37 million this quarter. 50 million less. Is that 50? Yeah, 52 million less.
So there's less demand for transportation of natural gas.
$52 million less in one quarter in 30 days. No, in 90 days. That's pretty intense, man.
But all of them are hitting too, like all the ones on
they're
NYSE.
all hitting. Well, when you had that takeover yesterday, you could see that this is how bizarre this is, folks.
Yeah,
Let me pull up Williams. Williams was getting taken over, and they just took these things apart. I think what happened there is that they saw what they were going to take them over for. Okay, so Williams.
Oh, take unders.
Yeah.
Oh, it's a take under.
And
okay.
so, you know, Williams, it was supposed to be a takeover, and it just went from 42 to 34.
Okay, so could you look on the weekly and monthly for the Veresen for me?
VSNCN. So we're looking at this in Toronto, and
they've never cut their dividend.
Yeah, well, they're gonna now. Yeah. Okay, so you're at $9.95. So that puts game to, well, it puts game to 870. Where I'm going with that, Mike, is that I'm going to the low that was established on the 09. I wouldn't buy this for a dividend, man, you know.
No. So you're looking 870 minimum.
Yeah.
Thank you.
Cooking, brother. Have a great one. Have a safe one. Stay right there, folks. We'll come right back. Oh, man, look at this. Blink. Dow's up 40. Nasdaq's down 28. S&Ps are up $1.50. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 45. Nasdaq is down 25. S&Ps are up 2.5. And needless to say, we were just talking with Mike there that you did have quite a little bounce. And I suspect this will run right into the end of the market. You know, when we started talking with Mike, the S&Ps were at 1861. You're at 1874 right now. And, you know, they can make them to 1881, which would be a mind blower. There's no doubt. But that's the type of market that we're in right now. What the S&Ps did do, however, is that as long as you stay inside 1865, they just saved themselves, meaning that you can get a bounce going. NQs are really close. The NQs right now, the NASDAQ, we are at 4074. Let me just see what number on this one. That has to get back inside. It is. It's 4072. 4072, you're back inside the range there, too. Let me pull this back a little. This is going to get intriguing, too, because Apple is so weak. So you're at 4075, and anything inside 4072.75 is game, you know, to even get up to 4111. That'd be a mind blower in 5 minutes. You could do it in 15 minutes, but that would be an absolute mind blower. So let's see what. Let me see what Apple's doing. I don't. Apple. Don't touch Apple, man. Apple's in big trouble. Let me just look at this for a second. So we'll see. So Apple come off the bottom slightly. It was at 107.86. You're at 108.97. The IBB must have moved somewhat too. So the IBB is moving. It's the IBB. The IBB, folks, keep your eye on the IBB, man. This thing's going to be a trip, man. So the IBB just went from 86 to 90 in about a heartbeat. You know? So it looks like what we are going to have out here. The Dow's up 60 right now. So if we take a look at this, what you're going to have again is that you're going to have that rejection. On the SPYs, you're going to have the rejection of lower price on lighter volume. So that's a rejection. That's saying, the bounce will continue into tomorrow. The Qs are going to be dicier. The Qs need to close inside 99.69, and right now you're at 99.54. 98.63. Oh, actually, what the Qs did okay. So watch what the Qs did. Now the Qs traded into 98.93, and they did reject that price. The differential goes like this, though. That's a rejection. It would be much more bullish if the Qs closed at 99.69. The reason being is that was the low of yesterday, and so yesterday was the actual test. But as I said a little bit earlier, the more that you test bottoms on a testing, in order to get a bounce, the heavier the bounce can actually be. If we go take a look at the small caps, right now we're at 107.62. Let's see if they're moving too. They're moving slightly. They need a lot more juice, however, to get into a higher price. Look at that NASDAQ, man. That thing's a mind blower. So when we started here, this NASDAQ was off $50 into 4487, and right now you're at 4521. And anything over 4529, it still needs a little more juice. It still needs about 7 more points. You get that baby going. Bottom line is that we're gonna be bouncing the next couple of days. That's the way this market is set up right now. So this is going to be wild watching this thing shake out. Particularly, did you see how deviant that is, folks? It's so deviant, it's amazing that you're at lows, Apple's falling apart. Somehow, some way, bottom line is that when there's not enough sellers, guess what? You can't bust it down forever. You don't bust it up forever. Bottom line, supply and demand's what it's about. Dow Industrial's up 63, Nasdaq's down 21, S&Ps are up 350. You stay right there, folks. We'll be coming back from the 4 to 5 hour. I'll be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Hope is a renewable option. If you run out of it at the end of the day, you get to start over in the morning. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 47, NASDAQ down 26, S&P's up 3.5, gold contract down $4.60, trading at $1,127 an ounce. Silver up 7 cents at $14.61 an ounce. Platinum down 2 at $9.15 an ounce. Copper flat at $2.25 a pound. Light sweet crude up 77 cents, trading out at $45.19 a barrel. Bonds 10-year up 10 ticks, 128.24. 30 up 9 ticks, 157.27. King dollar down 132 ticks at 96.05. The euro up 6 at 112, and the yen flat at 119.77. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? It's a wild one, folks, I can tell you. So, the SPY. What we've done here is this. And this is going to be wild watching the rest of this week shake out, folks, because this is what we have happening. So, the SPY out here today traded to a price point of 186.93. You've done 151 million shares. You closed at 188.08, and 188.08 is inside the low of yesterday. The low of yesterday, as well as today, has been testing the October 24th, 25th, and 26th price areas. Now, yesterday on the S&Ps, we did 178 million. Today, we did 151. It would have been better if it closed at 188.37, because what that was the low that was generated on the 26th. What you have here, folks, is that this is a move that wants to bounce. It did 100% move, well, not quite 100% move, but you got to remember something. We just traded from 202 down to 186. You're trading at these levels. The volume is contracting by over 50%. That sets up a bounce. Now my take is that it's setting up a B to C of a much larger ABC down that more than likely are going to blow this bottom out. And we'll talk about that in a second, because last night you had the Nikkei blow the bottom out, you had the Hang Seng blow the bottom out. The Nikkei blew it out in an incredible way. Our own markets, however, look to me like we're going to bounce, and this SPY, we're at the 188. That can bounce into the 192 up to like 194 pretty quickly. Now, the NDX 100. The NDX 100 is a mess. I mean, big time. That wants to bounce too, though. Guess what? This one's going to be harder to bounce, but this wants to bounce. NDX 100, 3 Qs, closes at 99.47. Now, that closed below the low of yesterday. So that's saying, hey, you know, you have game on to 98, 93. What it did do is that's where it rejected today. So it rejected the low of August 26th, 98.93. It had 47 million shares versus 104 million. This is what the difference is, though. The difference is that inside the NDX 100, let's go to the biotechs first. The biotechs just may save the NDX 100 and let it bounce. This is what it is. The biotechs yesterday, well, first off, you know, in 10 trading days, the biotechs went from 366 down to 285. Yesterday, we hit a low, and we did that with 11.5 million shares. You're coming into the low that was established on the 24th, which is 284.16. What the biotechs are doing today, they were up $10 at one point, ended up being down $1. They were pushing into the lows of yesterday with lighter volume, 11.8 million. I suspect you're going to see those bounce also, but the biotechs absolutely want to blow out this bottom. The bounce in the biotechs, however, that thing can bounce up to 320 in about a heartbeat. Small caps. Now, this is where this gets really wild, because there's always someone leading, folks, and the small caps basically have given away the store. And the store they're giving away is that the small caps got under the low that was established on the 24th. Right now, we're at 107.56. 108.26 is the number. So that, I suspect, yeah, you'll get back inside them probably tomorrow, inside that range. But that's setting up, saying those babies want lower price. Gold contract. What do we have with gold? Gold contract pulls back with lighter volume. We got into a price point today of, we're trading at 11.27. We got to a low of 1123.50. You've done volume out here of 98,000 contracts. That 98,000 is coming into 152,000 as well as 178,000. Bottom line is that you have two separate nice swing points that have volume on them. The first and closest one is 1156.40 from the 24th. There we go. The second one is from the trading of August 24th. That is 1169.80. That's where this baby wants to run to. We'll see how we get up into that level, but I expect you're going to see that. Why? Well, guess what? Let's go over to the dollar index. The dollar index, folks, it's pretty amazing when you look at it. DXC. What we have with the dollar is that the dollar absolutely cannot catch a bid. Zero traction on the dollar. DXC. What the dollar index has done out here today, we're trading at a price point of 96.04, 28,000 contracts. Intraday, the dollar was trying to get into the high from 2 days ago. That high was 96.88. Now, the thing that's crazy is that that high from 2 days ago is not even a swing, folks. This is the third time that it tried to get into a swing, and a minor swing, and it couldn't handle it. The swing point on the dollar is August 7th, folks, which is 98.74. It went down into 92. It tried to just get back up into a minor swing on the 3rd of September, couldn't handle it. Comes down again on volume to 94.67. Goes back up again, and the absolute mind blow is that when Yellen come out and said, no, rates are going up, you know, bottom line. And then the dollar still couldn't catch a bid and couldn't take out its high. Couldn't take out a minor swing high. Dollar wants lower price. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 47. NASDAQ down 26. S&P's up 250. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished up 27, Nasdaq down 26, S&P's up 2.5, and as we do each and every Tuesday at 20 past the second hour, we have our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, Andy's got a great show, 5 to 6 Eastern Standard Time. Now, if you're in your car traveling across this great country of ours, folks, remember that you can get all the programming at TFNN right on your cell phone. TFNN.mobi. That's all you put. You put that in your browser, you're going to get the audio stream coming in. If you want to get Tiger TV, just on your browser of your cell, go to TFNN.com, and on the right-hand side, you're going to see a little box with devices on it. Hit that box. Our servers know exactly what type of phone or tablet you're on. You'll get Tiger TV, which is the charts and the audio. Andy's also got a great newsletter. It's the Technomento Commodity Report. You can test drive it right here, right now, 30 days, absolutely free. Andy Heck, what's going on?
Hey, Tom, how are you?
Doing great, man. You having a good day?
I'm doing good. So I'm going on vacation tomorrow, late tomorrow, and I'll be back October 13th. I'll be back with you. But I'm going to hang out and see how this quarter ends tomorrow. A lot of little window dressing, I would imagine, before the fourth quarter starts on Thursday.
Yeah, it's going to be intriguing. We'll see whether it's going to be window dressing or window smashing. I'm looking for a bounce, but, you know, it's going to be intriguing, you know, because the market's having a tough time holding it, no doubt.
Yeah. I mean, the market is having the equity market's certainly having a hard time holding it. But, you know, people get paid based on, especially mutual fund managers get paid. I think that, you know, the power of some big positions generally comes into play on these quarter end days. So we'll see what happens.
Yeah, no, there's no doubt. There's no doubt.
Meanwhile, commodities are going to have, regardless of what happens tomorrow, commodities will have the worst quarter of the year. No surprise there. Glencore's having a real rough year. If I was, you know, it reminds me of the Glencore situation. Reminds me of when Philip Brothers went out of business.
Do they? You know,
yeah.
I've been looking at that stock in London, man. It's pretty intense. You know,
and I wouldn't buy the stock.
No
I'd buy
way.
the bonds. I'd buy the bonds.
And what's happening, folks? This is what is a riot. Okay, so when you look at the news today, I got to show you something. When you look at the news today, you know, it's saying, oh, Glencore, you know, saved itself, right? You know, it was up so much. Let me show you something. You see this chart if you're watching Tiger TV. It'll blow your mind, man. The Glencore, you know, you're looking at this in pence. We've gone from 307. Yesterday, it was down to 66. And big deal, you're at 80. You know, I mean, it's like a joke.
Well, it's, you know, it's always like that. If a market goes from $3 to $1.50, it's down 50%. And then if it goes back to $2.25, it's up 50%.
Right.
It's kind of misleading.
And I guess, you know, one of their large problems, you know, have to do with buying the assets, you know, Xstrata versus just trading the assets.
Well, yeah, to a certain extent, but you know, they're you know, you're in that business and you make money on volume, and when volume goes down because China is kind of not in the markets like they have been for the last decade, you know, you're gonna not make money, and they have a lot of, you know, costs, a lot of overhead. I think that
they used to have
the U.S. banks saved a lot of money getting out of this physical commodity business.
Oh, well, there's a huge article today that Goldman was pulling his hair out when Glencore was going into this business, and now they're so happy they can't see straight.
Absolutely, and maybe they'll go. You know, maybe they'll go in again now. You know, it's a lot.
Well, no, I'm talking about the physical part of it, because it's not the trading part of it that's hurting them.
That's what I'm talking about. The physical part.
It's owning that asset, man. You know.
Right.
Well, it's owning all those employees. That's what it is.
Right. It's overhead. It's huge overhead and huge financing costs. I mean, Glencore is really choking on their, they had $30 billion in debt. Now they're down to $20 billion in debt. But the stock, I looked at it. The stock, I think, is undervalued. I mean, if you're going to look out and make projections for the next decade, 2 decades, they have a lot of collateral. They have a lot of reserves of commodities in the ground. I think that the best thing that they could do right now is to buy back all their stock and go private.
Yeah. Well,
and I think that might happen. They're smart traders. They're not going to disappear. That's for sure. They have a lot of assets. You know, the market is killing the stock.
On the buyback, they have to find out where they're going to get the money to do the buyback. You know.
Oh, their partners have a lot of money, Tom.
Well, this guy, Ivan, okay, he just went from, basically he just lost 90% of his wealth.
Well, I understand that. But they will find partners who will put up cash. And you know what? Don't be surprised if the Chinese don't put up some cash to buy, help them go private.
Yeah. Hey.
Yeah. I mean, it is certainly possible. But so that's kind of the big story in commodities here. I think you're going to see that in a lot of other commodity companies. You're going to see problems with BHP. I've been writing for the last couple of months that I don't understand how these companies can continue to pay dividends. They pay dividends to the end. It's insane. It's like it's giving candy out, and then eventually you're going to wipe out all their equity, all of your shareholders' equity, which is what's kind of happening now.
I know, there's no doubt, man. Look at even Valley. Okay, so you pull this up, folks. Valley's at $4, okay, breaking lows, and they're still paying a 9% dividend. It's like, you kidding me, man?
Right. That's ridiculous. There's no reason for that.
No.
It's crazy. No. So this quarter, you're going to have 2 commodities out of 36 that I cover are going to be up.
Really?
Rice. Because of El Nino. And rice is a lesson to all of us, because El Nino could come back and bite a lot of these agricultural commodities in the months ahead.
Okay.
Rice moved from $97 up to, like 133, up 36.5% since May. And that's because of El Nino. Now, I don't know if you saw this, but in Taiwan yesterday, they got 26 inches of rain in 12 hours.
Yeah, their market didn't open, last night.
Right. 26 inches. That's a huge snowstorm. Rain, I don't know what the equivalent.
Yeah, no,
I don't know what the equivalent of that is in snow. It's kind of like 300 inches or something.
Yeah.
But the point is that El Nino plays big games with weather patterns around the world. And what we saw in rice might be kind of an omen for what we're going to see in some other agricultural type commodities. And I think that that's the only kind of really interesting thing, the only bullish thing going on in commodities right now. And I think that it could affect markets like sugar, like coffee. So those are the kind of ones you have to put on your radar here. As far as the metals are concerned.
Here, let's look at sugar for a second. 1246. Oh, that's not bad.
It's 1246 because we've rolled to March. So, the contango is big there. But it's not bad. It doesn't look terrible. It's a third of the price it was in 2011. So there is room on the upside there. Certainly coffee at $1.20. There is room on the upside in the coffee market here. Metals are a problem because metals reflect China, and I'm talking about base metals, copper, aluminum, nickel, lead, zinc, tin. The only other commodity that's up this quarter is tin. It's up about 7 or 8%, but it's only up 7 or 8% because it's been down 30% up until now. So it's a little bit of a bounce. Every other metal is down, including the precious metals. And platinum today put up a print under 900. So that's kind of ugly there.
Yeah.
Yeah. Very ugly. Very ugly.
Stay right there. We'll come right back, all right? Sure. Andy Heck, Tom O'Brien, we want to hear from you folks. Our phone number is 877-927-6648. Dow Industrials are up 47. Nasdaq's down 26. S&P's closed up 250. We're going to be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Hecht, and we are talking commodities. And don't forget, folks, he has a great newsletter, the Technometric Commodity Report. You can test drive it 30 days, absolutely free, coming over to our website. Now, you don't have to be trading futures, folks, to take advantage of Andy's report because of the structure. There is so many different ETF structures that trade those commodity markets. And when we're talking grains, tomorrow we have the grain report coming out, I believe, right?
Right. We have the inventory report, and I think you're going to have Sal Gilberti, the founder of Two Korean Funds, on.
We sure
That's
are.
excellent. That'll be interesting. So tomorrow's a big day, end of quarter. I wanted to point something out here.
Yeah.
Okay, you know how I like to talk about inter-commodity spreads?
Yes.
Okay, so I have a chart up here of the price of cattle divided by the price of hogs.
Okay.
And I was talking for a long time. The average over the last 40 years or so is about 1.4 pounds of pork value in each pound of beef value. So this has corrected dramatically over the past couple of sessions. We've gone from about 2.5 pounds of pork in each pound of beef to 2 on the active month contract, but on the nearby contract, we've gone down to 1.7. So this has corrected big time. But I wanted to show you this in relation to this. Let's just get this chart up here, which is the gold platinum spread, which has gone down to all-time lows of $210 discount platinum under gold. So what I'm saying here is I want to be long platinum and short gold here at this point on this relationship, because I believe, the long-term average on this relationship is a $200 premium platinum over gold. And whether gold or platinum go up or down from here, chances are that this intercommodity spread will correct, whether if gold goes down or if platinum goes up. And you know that platinum can be a very illiquid market, and it can rally very, very quickly. So even if gold stays the same or goes up marginally, platinum can go up a lot. And if gold goes down, it can naturally correct that way. So it's not really taking an outright view on either gold or platinum. It's taking a view on this intercommodity relationship, which is now at all-time lows. So, something to point out. Which is pretty
cool. Oh, yeah.
Right, exactly. Something to point out, because we've seen it, we saw it hang there for a long time in cattle versus hogs, but eventually these things tend to revert to the mean, and these are some of the best trades that I find out there in the markets.
Yeah, well, it's going to get intriguing here. So last night, you probably saw this last night. So what happens, folks, is that physical metal numbers, come out every month. Last night, you had China and India, man. They bought a lot of physical gold in the month of August. So we got August numbers last night. Those numbers were up 29.1%, Andy.
Yeah.
Big numbers.
Obviously, they haven't bought enough because the price is not going anywhere. Obviously, they haven't bought enough. I mean, look, the bottom line is markets go up because there's more buyers than sellers, and they go down because there's more sellers than buyers. Right now, these markets, there's so many divergences all over the place. And I think that, the problems in China weigh heavily on all these raw material markets. We're going to have to see how this thing shakes out. But it's going to be very, very interesting through the fourth quarter, because look, we were down the first quarter in commodities, up the second quarter. We're down really sharply the third quarter. I mean, if everything holds around where it is now, and to see what happens in the fourth quarter. Look, everyone's expecting now. There's so much bearish news about commodities out there, but it's hard to make a bullish case when the number one demand side of the equation is not buying. And look at where copper is closing. I look at copper and crude oil and lumber as really the bellwethers, and copper is coming into the end of the quarter. That this market hasn't been able to make a new high in 4 years now. So this thing's coming in 4 cents off the recent, 6 cents off the recent lows. Lumber just made a new low. Oil's trading at $45 a barrel, and it looks like it's asleep. I think we might have to wait until the November OPEC meeting to get a big move in oil at this point, because look, oil at $45. Hey, okay, it's $8 over the recent lows, but it's dead. It's really died. It's oil. Let's take a look at oil for a minute, because oil had that crazy period at the end of August.
That's right. You came off the lows with volume.
Right. Where volatility went to like 100%.
What you did, folks, is you went from $38 to $55 in 6 trading days.
Right, exactly. You had like a 30% move in a week, and then volatility was enormous, and now it's kind of died a death at 40, and it seems like $45 is kind of the pivot point now, and volatility has dropped like 45%. So and you got bullish and bearish things pulling at each other. Term structure has come in a little bit in oil, which is kind of positive.
Okay.
The crack spreads are weak, but I kind of put that to the side because this is a seasonal time where driving season's in the rearview mirror, and heating oil season is in the future. So, this is not a big product demand time of the year generally. So this is all very, very interesting what's going on here. Oil is really being pulled in 2 directions, and you have this OPEC meeting. Now, if U.S. production falls, which it should, because rig counts have gone from 1,600 to something like, 640 in 12 months, production should fall below 9 million barrels per day here. Now, that should be taken over by the Iranian crude that's going to come out. But maybe OPEC, when they see U.S. production below 9 million barrels per day, will cut overall production, and that would give a support to the market. So this November meeting that's coming up for OPEC, this is their biannual meeting, will be a very important meeting. And I think maybe we're going to trade in a range until then.
Well, watch this. This is where it's going to get, I think, interesting. Let me see. CL1. So what happens, folks, with these commodities is that everyone's watching, okay, we get inflation, deflation, where we're at here. And when we get into, when we get into December, really, it's going to be December. It's going to be a year-over-year aspect for the core inflation value, Andy, is going to be hard to continue lower. You know what I mean? Because what happens here, folks, is that the aspect, we took oil down from 107, down to 44, really. And what's going to happen, a year-over-year aspect inside that core number, right now it's 1.8. That's going to change, because...
Yeah. Well, accounting is an art, not a science, right? Depends how you look at the numbers.
I agree with you there, but this is not an accounting deal. All we're talking about is that, okay, so your core rate has to do with the price of oil is. It has more than that, but the price of oil is a huge deal. So what has happened is that our core rate hasn't gone up over 2 because oil all of last year just went down from 107 to 45. My point is that when we start trading in December, anything around 50, okay, that's where we've been for a year then. You see what I'm saying? So,
right, no,
so if you go over that level, then your core rate's going to go up. And my take on that is...
That's how your Fed's going to raise.
Well, it says two different things. It says, I don't think the Fed's going to raise, but it's going to say that, now we get inflation into the picture. Okay? So inflation into the picture says to me
I hear you, but I go back to my original comment. That's accounting is an art, not a science, right?
There's no doubt about that, man. Cooking, brother.
All right, take care.
We look forward to the show. 20 minutes, Andy.
Thanks a lot.
Okay,
take
man.
Care.
Stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So let's go overseas. First, folks, we're going to go to the Nikkei 225 in Japan. I want to show you how this baby broke down last night. We were down 714 points. 16,930. Now this is a huge problem. This index has just gone from 20,900 to 16,930. If we put this up on a larger time frame, what you're going to see is that as soon as you got back inside the 18,295, that is setting up that it wants to make a run somewhere down to the. You can actually put game at 13,300. So that's 3,600 more down. Okay, big number, folks. Now, that context, let's go to the HSI next, Hang Seng. So Hang Seng last night was down 692. That broke down also. Broke under the lows. Now, this is the second time that the Hang Seng had broke under the lows. The lows we're talking about, folks, is on the Orient, it was August 25th. The United States was August 24th. 20,865 is the number. We were dealing at 20,556. What does that set up? You put this on a monthly. What this is setting up right now is this is setting up that this wants to go down and test 16,170. So those two indices, you can see, bottom line, they look to me like we want to get down another 3,000 to 4,000 points. That's like a monster number. Okay. Now let's go to the UK. If you take a look at the FTSE, what the FTSE did out here today is this. We're down $49. The FTSE came into a swing point, and you get in there with lower volume. 58.98. You got down to 58.77. We closed at the 59.09. That's saying, guess what? The FTSE wants to bounce. That being said, I expect after the bounce, we've bounced once so far. I expect to bounce again. This bouncing procedure, folks, is building cause to go break out these lows. The DAX in Germany. Now, the DAX in Germany is a mess. You have two separate issues. You have Deutsche Bank, that's a mess, and you have Volkswagen, that's a mess. The DAX in Germany was down 33 today. You got to a price point of 93.25, which broke out the lows. You came back inside them, which is 94.50. That's saying that the DAX can also bounce. Now our own markets. The thing that's bizarre here, folks, is this, is that normally when you break out lows, like the Asia broke out lows, your probability goes much higher that would break out lows right now. Europe is basically saving us a bit. Our own markets, because of the way that we traded down, you got to remember something. We've been down a half a month right now, from 917. When you have that type of energy, just picture like you're running a marathon. At the end of the line, and the S&P cash goes like this. We're at 2020 on the 17th of September. The low in the cash is 1867. We hit 1871 today. And you hit that with dramatically lighter volume. We're talking about when you do that correlation together. Watch the correlation. It's pretty intense. The correlation is that we did 1 billion shares today versus the correlation on the 24th, which was 1.6 billion. So you're talking 600 million. On the 25th, 1.27, and on the 26th, 1.312. So you can see You can take either one of those, and you're either 27%, 31%, or 66% lighter volume. Okay, so what does that say? That says you're going to get a bounce. I suspect that bounce, so we have two different things happening. They've come into that area with lighter volume. You've been down, and the selling just at this point has dried up because anyone that was selling has sold. 2020 down to 1880, 1871 is a big number. Now what are you looking for? Well, I suspect what we're going to see is this. You're going to see a slight bounce. That bounce can get you, there's nothing stopping this bounce to, get the S&P somewhere up to 1929. What's that, 50 S&P points? We moved 22, that's 8. Yeah, we moved 28. We moved 28 S&P points today. So that's doable. That's real easy. Now, as you get up to that area, if in fact you're a bull and this is has volume behind the move, then you're in good shape. If you're a bull and that has contracting volume, which I expect it's going to be, but I'm a bear, that is giving you a confirmation that we're building cause for the way into lower prices. We go take a look at the SPY, and we put the SPY up, and what you're going to see in the SPY's at 188.12. You put this back on a monthly basis, and you can see tomorrow. Oh, this is so cool. Okay, so we're only one day away from the end of the month. So watch what we have here. Last month, low was 182.40, 3.7 billion. This month, you're already at 3.1. That's saying we're going to do about 3.3 billion. So that's pounding the lows, even if we bounce on volume. Where can you go? Well, you have 181. 181 is game right now inside the SPY. You break 181. This is where the real problem comes in for all of us in the marketplace. You break 181, and then there's nothing, folks, to stop this thing going down to 130. That's pretty intense, man. 130, just so you understand that in the context of where the S&P is, 130 is 1,300 S&P. 1,300 S&P is trading at August of 2011. That's about as intense as you get. And the problem here is the aspect of how we went up. That's how we went up. You went from 1074 up to this 2109 nonstop. That's the larger problem right now that is facing the market. Bonds. Now let's go over to the bond market, because what we did have in bonds today, and this is where we have some divergence. Bonds today stayed at higher price. That is saying that the 10-year actually is going to go hit the highs tomorrow. The 10-year did 1.2 million contracts. In fact, is this a closing high? 128.20. Check this out. This is going to be amazing. Actually, the 10-year, folks, this is a all-time closing high. When we hit the high on the 24th of August, we hit 129.10. We closed at 128.20. We just closed at 128.24. That is a yield of 2.05. This hits it tomorrow, you're going to be under 2 in the 10-year. 30-year, different ball game. The 30-year has a lot further to go. 30-year only did, and here's this is where the yield curve is changing a bit. 30-year did 269,000 contracts today, which isn't bad, but you're coming into 275,000. The low of its high is 158.11. We haven't made that yet. We hit 158.05 today. We're at 157.25. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 47. NASDAQ down 26. S&Ps are up a couple. And Apple, folks, Apple is going to get a lot lower price, which is going to continue to hammer that NDX 100. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And don't forget, our man, Mr. Andy Hecht's going to be coming up next. You can get that right in your cell phone, folks. If you happen to be driving in your car, just go tfnn.mobi. That will get you the full audio. You want to get the video, go to tfnn.com. And just hit that box and you get the Tiger TV. Now, let's go over to the XLE, because what you have, folks, is that it's so tempting to jump into this and don't even think about it. You know, the oil market itself, like when we were talking with Andy, the oil market's kind of dead in the water. I do expect, though, you're going to see oil trying to get to lower price. Why? Because this XLE absolutely cannot get any traction. The XLE had come off the bottom of 58.74. That was on the 24th. We go from 58 up to 66 in 4 days. You pull back. Now, watch how subtle this is, though. You've pulled back, and today we had 18.5 million shares. Yesterday was 16.3. You are going to go test this low of 58.74, and we'll see whether that low gets taken out. We take a look at the two largest structures inside the XLE. You have ExxonMobil. That was up 37 cents today. That, however, only had 13 million shares, and it's going into 23 million. So it's going to need a lot more juice in order to get to higher price. Chevron, what do you have with Chevron? Chevron, flat market, up 48 cents. Realistically flat market, though. Chevron looks like it's going to want to get into the 73.10 area. Pretty wild watching those ones shake out. Why? Well, let's go to rig. Let's see how it goes. So rig Transocean trading at 12.35. That's not done yet, going down. The consolidation is pretty intense. The top of the consolidation is 16.20. The low is 11.24. It's like what, 45%, 50% consolidation? Yeah, it is. This also, though, is building cause to go after its swing low. That swing low being the $11.26. These oil companies, folks, coming in for credit lines, it's going to be a huge problem. Not so much the Exxon Mobils of the world and the Chevrons of the world. Rig's going to have a problem. Let's see where, you get Diamond Offshore. That's up 41 today. This has already broken this lows. Look at this thing, man. This is a mess. So Diamond Offshore has just gone from $100 to 17. Let me pull this back. How many years I got to go back on this one? My God. Yeah, with Monster Volume. These aren't done going down yet, And this is where this always gets interesting, that what our perceptions are as that, like, oil will never go down. These stocks, are great stocks. And they are great stocks. Guess what? But when you look at the actual deal about once oil gets destructed, which it has, the amount of bread that these companies take in goes down astronomically. Like if you look at Diamond Offshore, if we look at this quarter versus where they were 4 years ago, $878 million they were taking in every 90 days. Now they're taking in $593 million. So you're talking about, what, $287 million less. That's 50% less. And the key there is that when you take in that type of money less, 50% less, can you cut your expenses that quick? Most times there's no way you can. That is one of the monster problems with Glencore. Glencore's problem, if they were only a trading firm as they used to be, that wouldn't be a problem. Where their problem comes is they bought Xstrata at the highs, and that, folks, is a monster firm, number one, mining firm. Number two, they were huge in the coal business, and guess what? You can't sell coal for anything. They're giving coal mines away, folks. They're giving them away. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking tomorrow. You stay right there. I'm man, Mr. Andy Hicks, coming right up. Wow! Go get him, folks.